All right. Well, that's on the macro picture. Let's see. It's a big week. You have the RBI policy on the 7th as well. Nischal Maheshwari joins in now to give us some cues on how he's looking at things. Nischal, good morning. Thanks for joining in. I want to first start with some of the auto stocks that reported their sales last week. And, for companies like M&M, for example, it was a very strong set, both in the auto as well as in the tractor segment. Double-digit growth for tractors, autos, especially SUVs have done exceptionally well, over a 30% growth there. Do you think there's still momentum in some of these auto names?
Morning, Sonia. Yeah, I continue to believe there, especially M&M basically. I think it has been surprising with numbers, and this time I think the tractor was better than expected. And obviously the SUV continued to be pretty strong. So the order book, the waiting period, I think it's a pretty strong one basically as far as M&M is concerned. And the stock is not very costly also. So I think this is a good time to continue to hold on to the stock and maybe add at these prices also.
Okay, add at these prices also. Nischal, so let's just talk about the other part of the market, right, which is new age stocks. And before I kind of come to you for the new age stocks, which were all the focus for the last 2 weeks or so, let me put out a couple of graphics for our viewers, which and I put this out as part of the piece on Editors Roundtable on Friday after market hours. But this is relevant and this will remain relevant. The common thread, and these are 5 stocks that I'm going to talk about. Let's have the first graphic up. What I simply did is compared where valuations for each of these companies is as compared to global peers. So, that the first one is Paytm. It's up on your screen. This is EV by sales, 1 year forward. And you can see, for yourself. It's come down to 2.6 times 1 year forward EV by sales, and where the others are at. The next one is Nykaa on your screen. Still big difference between Nykaa and players like Ulta Beauty, Bath and Body Works. Zomato is the next one. Again, compared to DoorDash, Deliveroo, Meituan, big difference still. And then I think we have Policy Bazaar, which I think is the next one which should come up on your screen. Delivery actually is the next one. Delivery has also come pretty close to where some of the global peers are. And the last one, of course, is Policy Bazaar, PB Fintech, where again, valuations have fallen pretty close to the largest player out there, which I could find, which is Goosehead Insurance. Policy Bazaar at about 6.2, Goosehead Insurance at about 5.9. It's not to say that stocks have made a bottom, but at least a few of them, particularly Paytm, there is Policy Bazaar and Zomato. In 3 of these cases, perhaps at the margin, you could make the case that valuations now are not where they were when they were first listed. There was a big gap between where global peers were trading and where they were, but a year out, valuations have compressed. Now, it's possible that globally also valuations correct more, and that puts more pressure here. And it's also possible that more selling comes, right? And I think most likely it will, especially from Chinese large players and Japanese players like SoftBank, etc., which hold large stakes. But the point is, I think it's perhaps time to ask the question whether at least a few of them, maybe 2 of the 5, are starting on their journey of a bottoming out kind of process. So I just thought should put this out. Nischal, any thoughts and anything you track in this space, and broadly, your perspective?
So, though we do not track any of these stocks, basically, we're in the process to cover them. But I have definite views about all these stocks, basically. And I agree with you, basically, at the time of the IPOs, they were whatever way they were priced. But having corrected so much. Now, I think, Prashant, what we need to actually see is basically which has got a model, basically, which will lead to profitability, because once you become listed, the listed market sees profitability. And I see a couple of them, basically, especially Zomato, Nykaa, Policy Bazaar. These 3 have very clear now path to profitability. But in the process, what you have to see is basically the growth which they have been doing, whether that growth is going to get compromised. I see very clearly happening in Zomato. A 40% kind of a growth they were doing basically in quarter on quarter, which has fallen to something like 20%. And I think that is going to be the fallout basically, which we have to see. And then we have to compare, saying that at 20% kind of a growth, does these valuation still warrant a buy or not? So I think we have to give them a couple of quarters, but these are the three models which I am very closely following, basically Zomato, Policy Bazaar and Nykaa, because it has created a new service basically out there. It is the market leader. So these are two or three things basically which I look at it. So it's a new service. So it's a disruptor. It's a market leader in its space. And obviously the quality of management is very good. So I think these are three stocks which I like in that space at the moment, which is on my radar.
Okay. Hi, Nischal. Morning. Nischal, China reopen has given some wings to the commodity space. As I'm looking at the Chinese rates, a lot of those metal related, whether it's iron or steel, they have moved up. Yes, they've corrected big time from the top. Would you look at playing these themes via stocks out here, maybe the ferrous or the non-ferrous space?
Morning, Nigel. I think we have to be cognizant of the fact, basically, that such a strong increase in the interest rates across the world and by Fed in particular, most likely is going to lead to some recession for a quarter or two, both in US and Europe. So I very clearly see that the export market basically is going to slump. So I think metal stocks at best is a trading play. I do not see basically it becoming a part of the portfolio at these prices.
Okay.